January 2022. And since then, we have started this talk series, and we had quite a few talks now. So the talk started with Dr. Harish Shande, who is from Silco Foundation, and he talked about poverty, sustainability, and technology. And we had talks on biofuel, functional nanomaterials, wind energy, and ocean renewable energy. Uh, then we had talk on high performance cooling techniques for decarbonization of data centers, water and crops, and also hybrid solar heating. Today, we gathered to listen to Ms. Vibhuti Garg, who is energy economist, lead India in the Institute for Energy Economics and Financial Analysis, and she will talk about outlook in energy sector in India. We have few challenges, ongoing challenges available now for the people to participate across India. So although the last date was mentioned as 15th May, we have decided that this call we will be open to all for throughout the year. This call is about inviting problem statements. So if you have been affected or impacted by lack of access to the reliable energy source, then you can pose some problems. And also, if you have any problem statement where people are adversely affecting their livelihoods, health, education, or anyone in your community, then you can also write your problem statement in this call. So if you scan this UR code, or I will also put the Google form link in this chat box at the end of the talk. So you can participate in the problem statement definition so that we can enrich our problem database. So once the problem database is enriched, we are actually opening the selected problems from this database for a catalyzed tech where idea or solutions can be generated. So this is, if you have any tech idea in the renewable energy sector, you can participate in catalyzed tech, and we would be actually inviting you to the campus to use our facilities, and also give a seed grant to you if you have been selected. So this call is open till 31st of May. This is the first cycle, and we are already been receiving some ideas which are like conceptual stage ideas, and then prototyping help, and we could give that seed grant. Also, the center has this competition open currently, which is a poster making competition and slogan competition. Slogan is to be in the Indian native languages. The theme of this competition is basically an affordable, clean, and renewable energy for protection of earth and environment. The call is open from 20th of May, and it will close on 3rd of June. The results of this talk would be announced on the 5th of June 2022. So thank you for your attendance for this talk by Ms. Vibhuti, and I would hand it over to Professor Gopal for introduction to the speaker.
Thank you, Professor Dheeraj.
Thank you.
Now it is my immense pleasure to introduce the guest speaker before inviting her to begin the talk titled Outlook in Electricity Sector in India. So Ms. Vibhuti Garg is an energy economist, lead India. Vibhuti's focus is on promoting sustainable development through influencing policy intervention on energy pricing, adoption of new technologies, subsidy reforms, enhancing clean energy access to capital and private participation in various areas of energy sector. Ms. Vibhuti has over 17 years of experience. Her work includes enhancing national and international understanding of India's progress and helping inform governments and financial institutions globally about the pace and opportunities of reforms in India, accelerating more finance into clean energy solutions so as to achieve decarbonization of the energy sector and also to help achieve the goals of energy security, self-reliant India. I now invite Ms. Vibhuti to begin her talk titled as Outlook in Electricity Sector in India, and also to please share the screen. We would like to inform to the audiences that you may post your questions in the question and answer box. Over to Ms. Vibhuti, please.
Thank you, Professor Gopal and Professor Patil, and a very good morning, everyone. It gives me immense pleasure to present to this esteemed group. So what I'll do is I'll spend the next half an hour talking about the outlook in the electricity sector in India and some key important developments that has happened in the last few years. And then I would be happy to take your questions as well. Next slide. Next slide. let's spend some time understanding what is the current electricity mix in India. If you look at the India's installed capacity, most of you might already be aware it is largely thermal dominated, and share of thermal has gone down from about 65% in 2017-18 to 59% in 21-22, and share of renewables, on the other hand, has actually gone up from 20% to 27% during the same period. Share of large hydro and nuclear have remained more or less constant over the years. Next slide. Now, if you look at year-on-year capacity additions, in 2017-18, India recorded kind of added about 12 gigawatt of renewable energy capacity and 5 gigawatt of coal capacity. But post that, we have seen capacity additions has slowed down, especially for renewable energy as well. And after a tough 3 years with policy headwinds, policy obscurity, as well as one of the other main factors was the COVID-19 pandemic, which kind of choked the growth in the capacity of renewables. After a gap of 3 years, in 21-22, we saw a record high of 15.5 gigawatt of renewables capacity, which were added. This includes largely solar, which had about 13.9 gigawatt in a year, and the other shares was comprised by, solar, wind, as well as little bit about biomass and waste to energy. Now, India's total renewable energy capacity stands at about 110 gigawatts. So on the one hand, renewable energy capacity grew, but on the other hand, coal capacity addition hit rock bottom at 2021-22, and only about 1.4 gigawatt of net, when I said net new coal capacity, was added during the year. So while there was a total of 4.4 gigawatt of gross capacity, which was added in the coal sector, but then there were about 1.5 gigawatt of capacity which reached the end of life and was retired. And there was an additional 1.5 gigawatt of capacity which was kind of converted behind the meter for captive use. Next slide. In terms of which are the players who have like dominated the capacity mix. So while 10 years back, the story was very different. Private sector had just started being part of this whole, I would say, electricity mix. It was largely the central and the state sector, but in the last 10 years, in last 1 decade, things have changed drastically, and private sector is now the dominant player with 50% share, and the central and state sector with only 25% share each. Next slide. Next slide. Most of you would have, faced, it was very prominent in the northern part, but I believe it was also there in the south as well as in other parts of the country, that a lot of us went through these power shortage crisis situation. And just before I start talking about the power shortage crisis, I just want to give the perspective on terms of, what is the level of demand in India. So on any average day, so this is for 23rd May, which was the latest data available till yesterday in terms of what was the peak requirement. So India has about 170 gigawatt of peak requirement on 23rd May, and the peak demand met was about 169 gigawatt, and there was hardly a power shortage of about 270 megawatts. So that was on 23rd May. Next slide. But in the month of April, so I'm just demonstrated for a particular day, which is on 28th April, but this kind of thing was prominent throughout April and towards the end of March and even early May, where the peak power demand was hitting almost 200 gigawatt on a daily basis, compared to 170 on 23rd May. On most of the days in April, end of March and early May, we had about 200 gigawatt of peak requirement. And with the current capacity, we were able to meet about 188 gigawatt of peak demand. And this was one of the highest power shortage days, wherein we had about almost 11 gigawatt of shortage, which led to huge power cuts across the country. As I said, it was more prominent in the northern parts of the country, but even in Maharashtra, even in other parts of the country, there were shortages that were being seen. Next slide. Yes, so this chart kind of gives you a snapshot of what the daily peak power shortages were in the month of April, and what were the prices that we saw at the Indian Power Exchange. It demonstrates, how during high power demand situation and prices at Power Exchange were just hitting the ceiling. So in India, at Power Exchange, the highest or the ceiling price was rupees 20 per kilowatt hour. But given that it was hitting, and it was not only during peak hours, it was the 20 rupees was hitting almost even at night, early morning. So during all the hours, and that led to the regulator kind of reducing the ceiling price from 20 to 12 rupees and starting April 1st. And since that, if you see this orange line, most of the hours or most of the days, the daily prices was hitting 12 rupees per kilowatt hour. Next slide. Now, I think let's spend some time understanding what led to the current power shortage situation. So firstly, there was exceptionally high energy demand due to the early onset of summer, which kind of drove the cooling needs and led to power shortage across various states in India. But more importantly, I think while there wasn't a problem of coal shortage, but coal transportation was becoming a big bottleneck. So the rake availability for coal transportation has been a constraint. Thirdly, power producers were not maintaining enough coal stock at their end. So while the requirement is to maintain coal stock for 24 days or minimum of 2 weeks, most power plants since last one and a half years were maintaining only coal stock for 9 to 10 days. And this is partly because distribution companies to whom they were selling power owe huge payments to developers. And this kind of impacted their cash flow, which in turn were finding it difficult to make payment of coal procured from Coal India. Another reason for this coal shortage was that some of this gap could have been met through imports, but imported coal prices were running at an all-time high. It was in fact 3 to 4 times higher than the prices prevailing a year back. So we now have about price of US dollars 140 per ton for imported coal, which was about $40 or $50 per ton about a year ago. And this made the proposition very expensive, and the discoms were being kind of avoiding buying expensive power. Lastly, I would say lack of planning and coordination. So while Central Electricity Authority last year highlighted in its forecast that in April 2022, India is likely to witness 208 gigawatt of peak demand, and with all the capacity addition plans, it was that India will meet this demand. But due to delays in capacity additions or inability of coal plants to ramp up, as in plants were running at about 68% plant load factor. So in an event of high power demand, if coal would have been available with them, those plants could have ramped up production to meet its increasing demand. But because of the reasons I just highlighted, that didn't happen, and the country witnessed huge power shortages. Lastly, the debt laden, power distributors do not make timely payments and prevents developers to maintain enough coal stock at time. So the poor financial health of discoms is also one of the reasons. And if you look at the Prapti portal, which provides how much these distribution companies owe to these power generators, it is as high as 1.1 lakh crore. And this burden will further increase, especially with global prices, of coal trading at steep premiums compared to average levels in 2021. This was also led by because of the Russia-Ukraine war. Next slide. Now, how could have India better manage the situation going forward? So the cost of coal-based generation is high and it is further inflationary. The current crisis has revealed that coal power generation, is heavily dependent on a long supply chain. India is poised to witness increasing energy demand, at the back of high economic growth. So there will be increasing need of capacity addition, and that capacity should largely be renewable energy. Government should accelerate deployment of renewable energy and green energy, or green hydrogen, and provide, incentives to investing in research and development on storage as well as green hydrogen, which are relatively newer technologies, and also kind of provide some level of fiscal support. Investing in energy choices for 2 to 3 years in the interim can lock limited financial resources. So we really cannot afford to spend money in building more new coal mines or building new coal power plants just for a year or two, because those are projects that have a life of 25 years or even higher. So one really needs to be very careful in terms of where we are spending our limited financial money. So while RE is intermittent, India needs to build, I would say, the entire ecosystem, which comprises of investing in flexible sources like battery storage and pumped hydro. India would also need to then, have an expansion of transmission and distribution network for better adoption of renewable energy, as well as modernization and digitalization of grid. And then also, when I say ecosystem, India also needs to develop its domestic manufacturing of inputs like modules, cells, wafer, electrolyzers even. So a pathway of sustainable energy choices should be the way forward. Next slide. Next slide. Sorry. In terms of looking at renewable energy prices, how they have moved over the last few years. So wind and solar are actually complementary and they are not competitors. Offshore wind is coming fast, but won't be competitive for another decade. The prices are still high, but solar module prices and the batteries packs have witnessed a 90% deflation in prices since 2010, whereas onshore wind turbine prices have almost halved during the last 10 years. So this decline in prices has been one of the major factors that have driven, increasing deployment of renewable energy. Next slide. Now, if you look at the movement in solar tariffs in India over the years, they are deflationary. However, observing the tariff trend over the past 6 quarters, the L1, which is the lowest tariff discovered in utility scale solar tenders, have increased by an average of 22% above the record low tariff, which was 1.99 rupees per kilowatt hour in December 2020. So prices have now actually started rising upwards on account of increase in module as well as freight costs. But we strongly believe that this increase is temporary. The long-term pricing of solar energy is likely to see a record low of rupees 1 per kilowatt hour within the next decade. Next slide. Now, as I was mentioning that, the prices of solar tariffs have gone up, and we try to kind of analyze, what have been the factors that has led to these prices increase. So firstly, impact of basic custom duty and ALM, which is approved list of module manufacturers. There's an anticipation, that there'll be an upsurge in the demand for domestically manufactured solar modules due to BCD and ALMM, which will lead to domestic solar manufacturers increase their prices by US 3 to 4 cents per watt between February and March 2022. Secondly, in general, also globally, the price of solar modules have increased by about 38% from August 2020 to March 2022. A surge in the prices of polysilicon because of geopolitical tension as well as COVID-19 pandemic has been the strongest kind of driver of these rising module prices. Other key factors include commodity price hikes like their inputs such as glass as well as metals, including copper, silver. There have been surge in prices of different commodities. And also there has been a surge in freight charges as well. So that has also kind of led to increase in prices. Another reason is augmentation of demand. So there has been a supply-demand mismatch because of which, we have seen some prices going up. Over the past 2 years, demand and acceptance for solar has risen worldwide. The demand for cheaper and cleaner sources of energy, with corporates, also setting up huge targets for decarbonization and net zero goals, is further driving the demand for solar. So commodity prices, has increased because the demand has been outstripping the supply. Increase in GST is another factor. So on October 1st, 2021, the Indian government increased GST on solar cells, modules, and inverters from 5 to 12%. And this led to, again, increase in capital expenditure of these projects. Insurance premium. So with the rise in pertaining to climate change, insurance premium for solar projects are also becoming expensive. And lastly, I would say other macroeconomic factors. So we had seen China being one of the biggest supplier faced a lot of power shortage, which led to closure of factories in China. So there were a lot of blackouts, lack of power supply, and that has impacted their production and supply. And that is one of the other global supply disruption, which kind of led to increase in module prices. And recently with the Russia-Ukraine conflict, prices have gone up further. Next slide. Now, this chart kind of gives you a snapshot of levelized cost of energy in India. So PV or onshore wind, as you can see in the graph, is now the cheapest source of bulk power. New PV and onshore wind is now competitive with existing coal and gas-fired plants. We'll do the merit order stacking. So this is the order in which power plants will get dispatched, because dispatch happens primarily on the basis of variable costs. And for wind and solar, it's largely nil, but they have fixed costs, which are higher. Not as high as coal. So if you looked at the overall capex, so the wind and solar PV, which, as I said, are complementary, gains on price competitiveness terms. Next slide. Oh, the graph is not complete. Sorry for this, but you can just see the percentages. So one is how, so the graph was pointing out what is the share of different fuels in generation in 2019 versus how that generation is going to shift to 2030 and 2040. This is as per the India Energy Outlook released by IEA in February 2021. In one of the scenarios, which is a sustainable development scenario, IEA considers about demand growth of 5.5% per annum. And in its SDS scenario, it considers declining use of thermal capacity and increasing share of renewable energy. So the share of renewable energy in total generation is increasing from 20% to 55% in 2030, and to 79% by 2040. So India would be having about 80% of renewables meeting in the total generation mix. And apologies again for the graphs which has not come out properly here. Next slide. Now let's just talk about some of these emerging technologies in the electricity sector. Now we spoke how the share of renewable energy is increasing and is further gonna increase in the next 2 decades. Now, issue with increasing renewable energy is of grid integration will be increasingly becoming a problem. So when we develop more and more renewable energy, we need to also focus on flexible generation sources like battery storage, green hydrogen, as well as flexible use of the coal-fired power generation, which can really help in country addressing its big challenge of integrating large-scale renewable energy into the electricity grid over the next decade. So battery storage can provide a solution to help the grid manage massive amounts of intermittent wind and solar, provide dispatchable power during peak demand periods and other essential grid services. If you look at the costs, the battery costs have gone down again. The International Energy Outlook says India has the potential to become a world leader in battery storage, predicting that India could add about 140 to 200 gigawatts of battery capacity by 2040, the largest of any country and more than 100 times as much the installed capacity in US today. So battery storage will play a key important role in India achieving its renewable energy capacity target of 450 gigawatt by 2030. India already has about 110 gigawatt of on-grid variable renewable energy and is targeting annual addition of 20 to 40 gigawatt. Now for green hydrogen, though yet it is to be commercially deployed in India, green hydrogen, which is produced through water electrolysis using renewable energy, has a wide range of application in transport, industrial production of ammonia, methanol, steel and electricity storage, and this is one opportunity which India cannot afford to miss. So, and if you will see, there are big ambitions, both by the Transport Ministry, Mr. Nitin Gadkari, who has been pioneer or, kind of raising that India really needs to become export hub, not just to meet its own needs, but also become export hub for green hydrogen in India. Next slide. These are just some of the snapshots showing some of the bids that have been done on battery storage. So a lot of progress is being made now with big tenders coming for storage options. So SECI came up with a tender for 500 megawatt of battery storage system. Then NTPC is also coming up with a huge tender, has come up already with a 500 megawatt or 3,000 megawatt hours of energy storage project. Next slide. And these are some of the other players who are very actively pursuing big battery storage development. So Fluence and Renew Power is set up a joint venture to boost energy storage in India. Tata Power is also bagged another battery energy storage system project in Leh, as well as another one with SECI. So yeah, these are some of the players who are very actively looking at energy storage in India. Next slide. On green hydrogen, again, we are seeing a lot of oil and gas producers having a great interest. Like Indian Oil Corporation is building a green hydrogen plant at Mathura refinery. We also have IOC, L&T, Renew and Ions, another joint venture for India's green hydrogen business. NTPC, Reliance, again setting up big hydrogen capacities. So yeah, these are some of the news or some of the active developments that are happening in this space. Next slide. But in order to boost these flexible generation sources, India needs to undertake some of the other market reforms. So in terms of market sector reforms, What we need firstly is policy support for a mechanism like a time of day pricing to incentivize capital investment in key grid firming solutions to ensure flexible, reliable peak time power supply. Secondly, India needs deepening of short-term markets, which can also help in increasing share of renewable energy deployment and also providing confidence to investors to invest in these technologies. Now, with more avenues to sell electricity, the issue of compliance of power purchase agreement contracts can be addressed to some extent. And lastly, we have discussed how the DISCOM's poor financial health has been a big concern. So they struggle to make payments to energy generation and often fail to honor the contract, so undermining their ability to invest in technology and modernization of the grid. So there is increased financial risk from aggressive tariff caps, tariff renegotiations, as well as policy inconsistencies and capacity tendering progress. So the government needs to reduce off-taker risk by ensuring DISCOMs both honor contracts and make payments to generation. Further, they need to ensure DISCOMs comply with the renewable purchase obligations. And finally, to attract more investment, the government needs to ensure policy certainty as well as explore innovative financial solutions to attract more and more funds. Next slide. Now, this is the last segment of my talk today, which is looking at renewable energy investment. So investment in renewable energy in India kind of declined by 24% in the financial year 2020-21, dropping from about US $8.4 billion in 2019-20 to US $6.4 billion in 2020-21. Now, with the revival of energy demands and commitments from various corporates as well as banks and financial institutions to exit fossil fuel investment, the share of renewable energy and the investment is rising. In FY 21-22, investment in renewable energy totaled $14.5 billion, which is an increase of 125% from 2020-21 and 72% from the pre-pandemic times in 2019-20. Next slide. This chart shows how the investments or who has been acquired through which different sources. So mergers and acquisitions seem to be the major funding source in both 2020-21 and 21-22. Share of equity in total financing declined from 41% in financial year 2019-20 to 22% in 2020-21 and to as low as 8% in 21-22. Companies are also raising money through loans and advances, and its share is increased from 3 to 25% and then declined to 13% during the same period. Bonds share declined in 2020-21, but have picked up again with share of 33% in 21-22. So if you look at the most recent year, the 21-22, majority of money flowed through acquisition, which actually had 42% share of total investment. One of the largest deal which was done was SB Energy exited the Indian RE sector, and all the assets of SB Energy was acquired by Adani Green. And the deal was worth $3.5 billion. This was followed by Reliance, New Energy Solar, Scatec Solar, Renew Power, and Active deals. Also it shows, as I said, by the deal type, the majority of the deals were packaged as bonds, debt, equity investments. Even there were some joint ventures, and then there was some mezzanine funding as well. Next slide. Now, in terms of investment by sector, so While the investment in clean energy space has gone up, the gap still exists. And if you look at in 2020, 21, and 21, 22, rooftop solar investment is increasing as there is more demand from CNI consumers for installation of rooftop solar power. Share of wind increased from 10% to 23% from 2019-20 to 2021, but declined considerably to 1% in 21-22. So the only deal in wind sector in 21-22 was Torrent Power acquiring 156 megawatt of asset. In 21-22, almost equal shares of total investment were for generalized renewable energy and solar. So generalized renewable energy had 54% share, and then solar specifically had another big share of 42%. And only a small amount of investment went to rooftop solar to the extent of 2%, wind and green energy financing 1% each. And next slide, that brings to the last slide for today's presentation. The investment has definitely gone up, but and India currently, has been investing about 10 to 15 billion for RE annually. But what it needs is an 30 to 40 billion US dollars of investment annually for India to achieve its renewable energy goal set out for 2030. So we need about 30 to 40 gigawatt of annual capacity addition. Now, with decreasing cost of debt and solar module prices, it is an opportune time for the government of India to accelerate the energy transition through better regulation and policy definition in the power sector. The government really needs to reduce off-taker risk by ensuring DISCOMs both honor contracts and make payments to generators. Further, they comply with their RBO obligations and buy electricity generated through green sources or by buying renewable energy certificates. Finally, I would say to attract more investment, the government needs to ensure, I've spoken this few times, because policy certainty is key for investors to have that kind of a confidence. And if you look at the global trends, there has been quite a change with global appetite changing in favor of cheaper, deflationary renewable energy technologies, and with over 200 and more banks significantly have reduced their commitment to divest their funds from the coal sector. So there'll be enough big pool of money that will be available for deflationary renewable energy. And it is time for India to make an attractive investment opportunity. And in doing so, build a strong economy with sustainable energy choices. So I would just end by saying that there is a large opportunity and huge investment flow required in both existing as well as new clean technology. What India needs is an RE plus kind of an approach where investment also flow to make this infirm power more firm power, so that pace of decarbonization can be accelerated. Thank you. With this, I will just close my presentation and happy to take on questions.
Yeah. So thank you, Ms. Vibhuti, for talk that exposes us to what is going on in the currently going on in the electricity sector in India. So with this, I would like to take up some of the questions that are posted in the Q&A section. So the first question I would take is that with the global temperature rising, the peak demands will increase in near future in the summer period. So can we think of some alternative solutions to beat the heat apart from the regular approaches like using fans, ACs, etc.? Like it is being asked that is there any traditional alternative to all these things?
Definitely, while we really need to reduce our greenhouse gas emissions, which are one of the factors that have led to global warming and lead to increased temperatures worldwide. But traditional methods, I've been hearing that people, also paint their houses white so that those houses absorb less and less heat. You can definitely, use more innovative ideas to beat the heat and reduce your AC load. But apart from that, I think it should not come at the cost of social welfare, also not at the cost of reducing your industrial production, which was the case what we saw in April and early May. So yeah, there could be other ways, but as I said, it should not be at the cost of productivity loss, at the loss of production, or at the loss of welfare of the people.
Okay, so this was from demand side. The another question is from supply side. So it is being asked that how is the coal mining, transportation, these things are managed? Are there any subsidies prices in coal? And with this, I would also add, like as you were mentioning about the crisis in April, so we cannot do much about the demand side, but supply side, you mentioned there are a lot of problems with relation to the transportation of coal, etc. So how to deal with such kind of management?
On the coal transportation, in fact, the freight transportation cross subsidizes the passenger. So they are the ones paying higher charges so that railways can subsidize passenger traffic. The way we have an electricity subsidy, so if you are aware that commercial and industrial tariffs are much, much higher, so that the distribution companies can cross subsidize agriculture to whom they hardly charge any tariff, which is almost like a free power for them. And for residential, for certain amount of consumption, it is quite subsidized. So similar things happens with railways, and that is one of the reasons, the freight charges are much higher. So the bottleneck is that there has been not enough infrastructure development that was done to ramp up rake availability, because the same routes are being used for passenger as well as coal transportation. So it becomes a problem. And for coal transportation, the costs are much higher also because those trains have to, the cargo trains have to come back with nothing. So while when they're transporting coal from coal mine to a power plant, they carry coal, but on their way back, they just can't come vacant. So it's double, unlike a passenger train where, on the both the sides, the railways earn money, earn revenues by charging passengers, but in railways, it's just one-sided transfer of goods from which they have to earn, the revenue for rail, for a train to kind of get transport. So the bottleneck is being there. So government has ramped up rake availability. In fact, they are asking now the developers to start owning those rakes, and not only the Ministry of Railways being responsible, but developers also start investing in rake availability. So these are some of the methods to address the crisis, and that's how it's going to be dealt in the future. Or in addition, what government has asked most of these coal power plants, because of limited availability of domestic coal, is to also blend domestic coal with imported coal. Earlier they said 10%, but now they have said 30%. And if you will read, government has allowed that cost to be passed on till March 2023, as by invoking Section 11 of the Electricity Act, wherein government can ask any power producers to produce electricity for grid stability or for national interest. So those are some of the measures being taken.
Okay, ma'am. So next one is that as we India moving towards more renewable energy, in this scenario, how you see the role of natural gas-based power generation, considering its role in grid stability and transition to green energy, what role government can play to leverage the idle asset of gas-based generation? Yeah.
Right. So if you will see currently, allocation to power sector of domestic gas has been very, very limited. Until 2014, power sector was a priority sector, and the domestic gas was being given to the power sector. But now with such high prices, the allocation of domestic gas is for other priority sectors like CGD is the priority sector for the government, because they are building up huge CGD infrastructure for replacing use of coal or lignite by these industries. The role gas can actively definitely play in terms of grid stabilization by operating only during hours, peak hours. It cannot, because so far we don't have domestic gas. So most likely these plants will be run on LNG, and LNG prices are again at an all-time high. And with such high LNG prices, it's very difficult for the plants to be run as baseload. So they definitely can play a role in meeting peak demand or in grid stability. And remember, in one of the graphs, I did show how the power prices during peak hours or during this crisis situations was constantly at 12 rupees per kilowatt hour. So if those kind of price signals are there, then definitely gas will be dispatched. So we will see use of those idle 25 gigawatt of capacity, which is lying idle. And with increasing renewable energy, the higher are the chances that either battery storage or gas-based plants will be dispatched.
Okay. So there is one request for more elaboration on your slide regarding investment in renewable and other sectors. So if you want to, could you please do that?
Sorry.
Yeah. So
what exactly?
So the person is asking to elaborate more on the slide about investment in renewables and other sectors. Maybe this slide.
This slide.
Okay, I did mention that majority of the investment, so this is only investment in renewable energy. So there have been, we talked about the modes through which investments are being made, through mergers and acquisitions, or through loans, through equity infusions, through green bonds. So when a deal is being tied up, they don't specify the technology in most of the cases. Like a parent company just raise green bonds in general for investing in clean energy sources. So a lot of investment has been made for renewable energy in general. So out of 14.5 billion in 21-22, about 54% of that was for renewable energy. And out of 14.5 billion, 42% was specifically for investment in the solar sector. And as I said, there was hardly any investment in wind sector, as well as green energy financing or rooftop solar. So their investment is largely going for development of solar energy. Like if you saw the capacity addition for 21-22, so out of 15.5 gigawatt, 13.9 capacity which was added was solar energy. So yeah, solar is the choice for a lot of development that is happening in the renewable energy space.
Okay. So the last question for the day. So person is asking that though it is too soon to say, however, are we on the track to reach net zero emission by 2070? Little optimistic one.
2070 is too far off. I think I firmly believe nobody can predict. There'll be new technologies that will come up. Maybe we might be able to achieve it even sooner. Who knows? With all the innovation, with all the technology innovation happening, like till about 3 years back, nobody was talking about green hydrogen. Similarly, 5 years back, nobody was talking about battery storage. So in next 5 years, we might have another clean energy source which might be able to decarbonize not only electricity sectors, but other hard-to-abate sectors as well, which was not even thought of till about 3-4 years back. So the objective was just to decarbonize electricity sector because that was the low-hanging fruit. And now we are talking about betting big on green hydrogen for decarbonizing other industries as well. So I think it is doable, but at the same time, what India really needs to focus and prepare itself is for short-term goals. So really, we really need to ensure that that 2030 goal, which is 450 gigawatt of renewable energy by 2030, is being met. And similarly, we keep investing in other sources like green hydrogen as well.
Okay, so that is all for the Q&A. So with this, we would like to heartily thank Ms. Vibhuti Garg, our guest speaker for the Trees Talk number 9, for her invaluable time. We also thank the audience for their questions and an interactive discussion. With this, I would invite Professor Dheeraj Patil for vote of thanks. Thank you.
Hello, am I audible?
Yes, yes, Professor.
Yeah, thank you. I thank Ms. Vibhuti for readily accepting the request and for sharing her work and interest. I also thank Professor Gopal for comparing. So in order to strengthen the inclusive technological innovation ecosystem in the areas of renewable energy, energy production, usage, improvements in energy efficiency, the Global Center of Excellence in Affordable and Clean Energy, GCoE-ACE at IIT Dharwad, along with Selco Foundation, are looking for related problem statements, as I said in the introduction earlier, and innovative solutions through an innovation challenge, which we call as Catalyze Tech. The Catalyze Tech, the website is going to be launched on 30th of May. The problem statements may be from sectors such as livelihood, agricultural, allied agricultural industries, resilient micro businesses, built environment, health, education, etc. So we invite problem submission of these problem statements and ideas through a Google form, and if you are selected, if your idea has been selected, then you would be invited for a pitching. So I have given in the chat window this submission form for Catalyze Tech for problem statement and solutions. So you can look at this form. There is another submission form for the poster making and slogan winning writing contest for the awareness of renewable energy and use of the renewable energy. Also on the protection of earth. So you are invited to submit your entries for this contest as well. So the winning entry would be announced on 5th of June 2022. So please note down these forms. You can download this. These forms would also be available on our center's website. So thank you again. Thank you for joining. Thank you, Ms. Vibhuti. Thank you. Professor Gopal?
Yeah, thank you.
Thank
So
you.
with this, we end this session. Yeah, are you saying something, Vibhuti?
No, I just wanted to thank everyone for listening out patiently. Thank you so much.
Thank you very much. Thank you.
Thank you. See you.